In fact, let's take that question to Amit Shah, Technical Research Analyst at Indiabulls Ventures. Afternoon, Amit. Good to have you. What's your reading of the situation right now? Where do the next downside supports come in?
Yeah. We had broken out about 11,170 and we did hit the mentioned 11,400 and almost market retraced few points away from there, and I think it was a target zone where coincidentally with maybe the news flows and market has taken some sort of a profit booking mode. I think the theme for maybe next week or so would be market are likely to consolidate mainly large caps, so you'll see stocks like Reliance, you'll see stocks like Maruti, SDFCs. I mean, all these heavyweights which actually propel the markets on the upside. These are the stocks which are likely to remain on the softer side, and markets are likely to consolidate near the 11,100, 11,150 kind of a mark. But I don't see, frankly, any threat to the trend itself. Yes, we could see a period of dullness after we have seen such a sharp move on the markets. We are seeing some sort of sectoral shift that is happening. So pharma is something which we have been since last two to 3 days we have been recommending to clients. Lupin has been our pick. Lupin particularly looks very good on the upside. We have a target of 900 on Lupin. Broadly the sector, though it's not in a momentum, so it's more for a little bit of patient investors, but a lot of pharma stocks are likely to do well over the course of next, even from a trading perspective, next a week or so.
All right. Clearly, it is all about pharma. In fact, today, the names that you're mentioning nearly at day's high as far as some of these names go. Dr. Reddy's, in fact, has been outperforming for the last few sessions as well. Top gainer on the Nifty at the moment. But let's put the focus on an exclusive story that we're picking up right here on Business Television India. Top government sources have indicated that the Expenditure Finance Committee has slashed the budgetary support for the much-awaited electric vehicle policy by nearly 71%. We have Chetan Bhutani joining in from New Delhi with those details. Chetan, take us through what you're picking up here.
Well, what we are given to understand from top government sources is the fact that the much-awaited FAME 2 policy, FAME 2, remember, is of course faster adoption and manufacturing for electric vehicles in India. The much-awaited FAME 2 policy, which the government had decided to outlay about 12,256 crore rupees, has slashed its budget by a whopping about 71%. The Expenditure Finance Committee, which is of course chaired by Expenditure Secretary, decided yesterday that 12,256 crore rupees is of course a very big outlay for the next 5 years for electric vehicles, considering the fact that the policies are not yet clear. So as of now, the government has limited its sanction and allocation for electric vehicles FAME 2 policy to only about 3,500 crore rupees. Expenditure Secretary also decided to limit the allocation for incentives to electric vehicles when it comes to only to public transport, and the government will not go ahead and subsidize or probably give subsidies for private vehicles. Of course, the government will be working on giving out some SOPs for private vehicles, but yes, major incentives, both fiscal and non-fiscal incentives, will not be on the cards for private vehicles. Government is basically only pushing for ensuring that the public transport and shared mobility should get the maximum benefits for electric vehicle from the electric vehicle policy, and of course the money is sanctioned for it. And of course, since electric vehicle policy is also a state subject, the government wants that the states should be given the benefit as far as the state governments are concerned. So clearly, the government is also mulling lending at discounted rates for electric vehicles for public transport. If in case a state government wants to buy an electric vehicle for transporting the public from one place to the another, it can of course qualify for subsidies. But as of now, the government has only decided to cut the budget by 71% and limit it to about 3,500 crore rupees.
So, allocations cut, but the focus will be on electric vehicles for public transport. Thanks for getting us those exclusive details, Chetan. Let's take a very quick break. Lots of talking points in the market right now, including some auto stocks on the back of two-wheeler auto numbers that came in post-market hours yesterday. So we'll get a reaction on that. Also get your management commentary. Kamdhenu will be joining in on their Q1 numbers. That's coming up in next 2 minutes. Back after the short break. Welcome back. You're tuned into the trading day. Marico numbers are coming on your screen. We have the first print available to us. It's a profit print of 256 crores. Other income component of about 24 crores coming in. We were expecting a good quarter, looking at a profit print of 260 crores. So bang in line with what the street was estimating. The street is not really reacting too positively to those numbers right now. A cut of 2.2% right now. In fact, the stock is moving slightly lower as we speak. Looking for the top line print as well, closer to about 2,000 odd crores is what the expectations are. It's been a good quarter for some of the other FMCG companies on back of strong volume growth. Let's see if Marico can throw that trend up. So on the top line also in line with the estimates, slightly better, coming in at 2,027 crore rupees. We'll see what that other income component is about. But on the margin print, you're expecting a bit of a contraction because raw material prices have been going up across the space. But it really will be the volume growth trend that is important. Looking at the top line, seems like volume growth should have been good. They have taken some price hikes, especially for their flagship Parachute product as well. So that is another factor that should work in their favor. The low base because of GST should also look better on the volume growth front. Copra prices, mind you, have gone up by about 43% YOY till May. So that definitely is going to take some kind of a toll over here. Cardi oil prices are up about 27%. So the headwind of higher raw material prices continues for this one, and that may in fact impact margins. Also for a Marico specifically, higher ad spends may have some kind of an impact on the performance as well. The domestic volume growth has been strong over the last few quarters for them. So last year at this point the volume growth was 8%. Let's see what's the trend that comes up right now. Previous quarter, Q4 of FY18, the volume growth was at about 6%. So that those two are the comparable figures that we are looking at as far as the volume growth comparison goes for Marico right now. Just waiting for some more numbers to come out. Alright, so margins are closer to that 17.5%. So definitely a toll coming in on the margin picture. We were expecting an 18.2% number, so about 70 basis points lower than what we were expecting, and nearly a 2% contraction on a YOY basis as far as the margin compression goes. So Shefali Malik is here to run us through that print. Although good performance on the top line front, Shefali, definitely it's those raw material pressures that have taken a toll on margins.
Yes, absolutely. So I have to get the numbers in my hand as of now, but still looking at the headline numbers, the profit number looks in line with the expectations. The margins are slightly below expectations. We were expecting somewhere around 18.2%, whereas we've got the margins at around 17.5%. So there's a slight disappointment as far as the margins are concerned. But overall, if you look at the profit figure, that is in line. Raw material has, the margins have taken a hit because of the pressure as far on the raw materials is concerned. Copra prices, as we know, were up by about 43% in the quarter. So because of that, we've seen this hit on the margins. We look forward to more details as and when we get them. Overall, there seems to be some sort of disappointment as far as the margins are concerned.
They had in fact undertaken price hikes for Parachute to offset some of this margin impact. We were also expecting the low base of GST to possibly add on the volume growth front. We don't have the volume numbers right now, Shefali, but what is the street factoring in as far as the entire volume picture goes for Marico?
What they were factoring in as far as the volumes are concerned is a growth of about 10 odd percent. So and that is on a YOY basis against an 8%. So what will be the actual volume figure that we look forward to, whether there has been a disappointment as far as the volume figure is concerned, or the realizations were not enough to make up for the margins. That is something we'll have to dissect once we have the detailed numbers. But clearly the stock has been taking a knock after the earnings have come out, mainly because of the margins disappointment.
Absolutely. So let's wait and see what those numbers are. Just pull up the stock once again was down about 2.5% on the initial reaction to those numbers. Still down, in fact, down 3% right now. But just to get a sense of a little more on the stock at the moment, at least, Amit, I know it's an earnings reaction that's playing out on Marico, but what's the broader structure over here? Most of these mid-cap FMG names have done well. You had an Imami that came out with numbers as well. Dabur saw very, very strong reaction post its numbers too. GCPL has been holding steady. What's your call on some of these mid-cap FMCG names?
Right. Sure. So if we speak particularly about Marico, yes, the results have been announced. See, the trend is very, very strong. The structural trend is very, very positive. So just from a short-term perspective, see, it's been making all-time fresh highs. It's just, I think, a normal reaction, and only if it closes below, the 350, 348 kind of mark, if it closes below that, then yes, some kind of profit booking, maybe towards 330, 335 kind of a zone can happen. But broadly, these are very, very structurally strong stocks, and I mean, once the result reaction is probably digested, again, I don't see any problems with these stocks, and they should be again back to their normal behavior of making newer highs.
All right.
I mean, no really problems as such.
In fact, it's dropping a little further now, another percent since we started talking about this. So 3.5% cut on a Marico right now. But I believe, Shefali, you have some more details on those numbers.
Yes, so the revenues have come in at about 202 odd crore rupees versus 169 in the same quarter last year. So almost in line, that's 2026 crore rupees. So almost in line with what the street was expecting. So we have the finance cost, which is absolutely muted on a sequential basis. And their advertisement expenses have come in at about 165 crore rupees versus about 118 crore rupees, so on a sequential basis, so quite a jump, and that's almost muted on a YOY basis. On a sequential basis, it has risen quite a bit. In terms of other expenses have come in at about 221 crore rupees versus 206 in the same quarter last year, so some increase there as well. Raw material cost has increased quite a bit. It has come in at about 1062 crore rupees versus about 812 in the same quarter last year. So there is a considerable increase as far as raw material cost is concerned. So those are some of the more details which have come in as far as the company is concerned. Their current tax has increased to about 82 crore rupees versus 76 in the same quarter last year. So overall, a profit is, like we mentioned, in line with the expectations. So it's so from the numbers, it seems that it's primarily because of the higher raw material cost or the input cost that there has been a certain small dent as far as margins is concerned, but the street is perhaps not liking the numbers.
Right, I think Gaurang Shah is also on the phone line with us for a quick reaction to these numbers. Gaurang, the stock is down 5% right now. Profit in line, it's a 10% growth on the profit picture at 256 crores. Top line is grown by nearly 20%, coming in at 2027 crores. On the margin front is where the pressure is. Almost a contraction of 2%, coming in at 17.5% on a consolidated basis. Definitely seems like higher raw material costs have taken a toll here. Gaurang, what's your reading?
So I think primarily, I think the top line numbers, according to our estimates, are just in line, and one is just below what our estimates was, Dipanshu. Secondly, I think input cost is something that one needs to a little bit, concern. I hope operational efficiencies could improve the profit margin going forward from here on. But given the outlook on the entire sector, I think demand is going to see substantially higher levels, especially from semi-urban, rural India, and of course Tier 2, Tier 3 cities added with metros. We have a buy recommendation on the stock, and my sense is that one-off quarters should not be a reason for which you should change your long-term objectives and goals.
Right, Gaurang, before I let you go, we're just trying to calculate the volume picture here as well. Any estimates on the volume growth front? What are you looking at? Early double-digit gains?
I think so. It should be somewhere around that. Unfortunately, I'm not in front of the TV or in my office. I'm traveling actually, Dipanshu, so I'm not been able to pencil that.
Fair enough, Gaurang. No problem. We'll do a detailed review a little later. But thanks so much for joining in for a quick review of those Marico numbers. We'll wait and see what that volume growth picture is. Looking at 10 to 11% right now is what the estimates were penciling in versus 8% on a YOY basis. But moving away from Marico, more earnings. Kamdhenu, the management is with us. Strong quarter for them. Profit has doubled. Top line has grown by 75%. The management is on the phone line with us. Satish Kumar Agarwal, the CMD of Kamdhenu. Mr. Agarwal, thanks so much for waiting by patiently. Just run us through the fine print of your numbers. A very strong quarter for you. What's worked this time?
It is just because of the top line is increased, the volumes are increased, the prices during this quarter was significantly increased by 7,000 to 8,000 rupees a ton, and that gives us the 75% growth in the revenue in the Q1. That's the main reason.
All right, fair enough. Clearly quite a bit of good news in the quarter gone by. I just wanted to ask you about the other expenses. It's come in higher this time at 39 crores, slightly higher than the comparable figure of 31.5 crores. What was this on account of?
Basically, if you understand, Kamdhenu is a branding and marketing company as a new asset-light model. And we are just converting the unorganized sector into an organized sector, and we are having the largest capacity in India of the TMT bars. Basically, the expenses are on account of a branding and marketing.
All right, and if we talk about volume growth and blended realizations, could you give us a sense of how that has come in across products and what is the outlook going ahead as well for volume growth?
You see, volume growth is increased by 70% this year. 70% increase this year. The volume growth is 70%, and royalty income is increased by 39%. That gives the boost, and this is the best quarter this year.
All right. What's the outlook on utilization? Where do they stand currently, and will you be looking to increase?
I think this trend will continue during this year continuously, because there is a growth and in demand of the TMT bar just because of the lot of infrastructure activities throughout the country, in highways, in housing sector, in Pradhan Mantri Awas Yojana. That's where the company expects the same trend during the year, and in the next 3 to 5 years we are planning to double the installed capacity through the franchisee route. Right now we have the 2.5 million tons of the TMT bar capacity that will be increased to 5.0 million ton in the next 3 to 5 years.
All right, just a last question before we let you go, sir. What does the current debt picture look like? At what level are you comfortable? Any plans to reduce it?
We don't have, it's a zero debt company. We don't have any debt, and only we are utilizing the cash credit limit from the bank only for the purpose.
All right, sir. Thank you so much for joining in. Good luck for the quarters ahead. That's the management of Kamdhenu for you. A good quarter for them. Profit has doubled. The revenue is up 75% for them. Just pull up a couple of stocks. Pull up a Reliance Infra. Maybe had a bit of a weak start to trade, and now it has picked up momentum. It's up, in fact, 6% in trade right now. So keep an eye out on that. Pull up an NBCC, 6% jump on that counter as well. A very strong day of trade for that counter too. Aditya Birla Fashion is up 12% right now. Keep an eye out on that as well. Steel Authority SAIL is up 5% as well. So after opening on weak footing, some of these metal stocks have seen a very sharp recovery in trade. The focus is on Hindustan Copper. QIP coming in, looking to raise 900 crore rupees. Government will also sell about 10% stake in that one too. So you've seen a strong reaction on Hindustan Copper play out in trade yesterday as well. Opened strong today, has just about cooled off in the last few minutes, but trading with a gain of almost 1% as we speak. In fact, we had a chance to speak to the management about these fundraising plans, as well as how they would utilize this fund, whether government will sell more stake in the future or not. Here's what the CMD of the company, Santosh Sharma, had to tell us.
Fundraising plan depends on my expansion plan, as I told. My first thing is internal accruals. Then only I'll need this dilution. Maybe to the tune of 5% we'll raise this year, in 18-19.
Okay. And what are your total capex plans going ahead for the company?
5,500 crores. That will include not only mine expansion. We'll have to construct concentrator plants also. Then we'll have to develop infrastructures also, to cater to the enhanced requirement of our ore production. All these things, concentrator plant construction, mine expansion, and infrastructure creation, all these things taken together within a span of 5-6 years will be 5,500 crores estimated.
And how do you plan to raise this entire 5,500 crore? What are the various mechanisms?
It is basically internal accruals, number one, then through QIP route and through debt, all the three.
Sir, so this 5% that you plan to raise through QIP, how much is the amount that you'll be raising through 5%?
5% can maybe about some 500 crores.
Well, that is the management of Hindustan Copper for you. Amit, very quickly, just comment on a few of these metal names. We've seen SAIL, in fact, Deep just pointed out a minute ago, it's at the highs of the day. And in fact, some of these counters, for example, Tata Steel actually started off the day on a somber note and now are trading with gains about 0.3%. Which are the stocks that are really jumping out at you, especially on a day like today?
Right. Yeah. So yes, steel has seen a good V-shaped recovery after after they were falling and they were weak actually in the earlier. I mean, when the market broke out, actually that was when these stocks were actually weakening, and a lot of these stocks have.
Alright, a bit of a line with Amit. We'll just try and reconnect for you, but he was highlighting how there's been a V-shaped recovery in the entire metal space, and that's reflective on your screen as well right now, especially something like a SAIL. All of these metal stocks are trading at the highs of the day as we speak. Let's take a very quick break. We'll come back, discuss some of these stocks with Amit a little more on the other big movers and shakers we have in trade as well, as we count down to the last 30 minutes of trade. Back in 2 minutes.
Welcome back. You're watching the trading day. We're still trading below that 11,250 mark as far as the Nifty is concerned, down about 0.9%. In fact, 100 points down on the Nifty just as we speak. Bank Nifty similarly in line, dragging the index down 0.9% down on the Bank Nifty as well. Amit, we spoke about some of the banking stocks that were under pressure. In fact, let me get your view on an HDFC Bank first, because along with an RIL today, those are some of the bigger drags on the index. Come in on HDFC Bank, HDFC Limited.
Sure. Yeah, so see, these were the stocks which propelled the market up, and now since the consolidation is setting in, we are seeing the same set of stocks which are actually dragging the markets down. Otherwise, if we see, it's not too bad day from a stock specific perspective. So yes, some of the very few names which propelled the markets up initially, and then of course we saw wider participation happening into the markets. But yes, now SDFC, Reliance of course I've been very bullish. I continue to remain bullish on Reliance, but just in the near term, maybe from a week's kind of a perspective, yes, we'll see these stocks shedding about maybe 3 to 5% kind of their gains even from these levels. So yeah, some correction is looking possible for Reliance specifically. If I were to say, yes, Reliance can see levels of about 1120, 1130 kind of levels on the downside. So yeah, some profit taking is healthy, but I mean, remain very gung-ho on Reliance specifically. We have a target of 1500, but yeah, it's in the near term it's seeing some profit taking.
Right, near term maybe some profit taking is on the cards. I have a couple of more banks I want to ask you about, Amit, but let me also bring in Natasha Shankar of Yes Securities. Natasha, what's your view on Reliance right now? I mean, no one's denying the positive triggers that exist, but just in terms of A, valuation, B, upside potential, how are you viewing the stock?
So I think there's a lot of upside potential which is still there in the stock. We think that it can easily touch targets of in excess of 1250 and deliver returns in excess of about 16-17% on a CAGR basis over the next 3 years. So that is our view on it. There are multiple positive triggers for the company. They've been able to monetize their investments on the Jio side, and Jio is one of the major market disruptors, both not just for the broadband internet, but also in terms of the Jio fiber, in terms of the content as well as the direct to home segment as well. So we continue to remain positive, and of course the higher refining margins that the company has been able to deliver is another major positive for them.
All right, so that is an RIL. Positive view on this one as well from Natasha. But Amit, coming back to some of these banks that are under quite a bit of pressure today, starting with the Kotak Mahindra Bank. It's the top loser on the Bank Nifty at the moment. In fact, it's come under quite a bit of pressure. If you look at the last few sessions as well, it's down about 2% in trade today, trading around the 1280 mark. What is the sense that you have on a Kotak Mahindra Bank? Do you expect some more weakness on this one?
Yes, in the short term, I do see some more weakness happening for the Kotak Bank. It's been trading very sideways for last many sessions, and today again it has actually broken down from those zones. So somewhere around 1240, 45 kind of levels are surely possible. These are all trading, short-term downside targets. So yes, in the very short term, Kotak Mahindra Bank is looking weak and should shed another few percentage points, for these targets. For the Bank Nifty too, Bank Nifty broke out about that 27,200 mark. And it very quickly rallied up to 27,800 plus something. So now it is possible that it again comes back and tests the zone of 27,200, 150 kind of a zone. So the Bank Nifty itself of course is under pressure, and you'll see the components within to remain soft for the next few sessions basically.
Okay, that is on some of these other private banks. IndusInd Bank, meanwhile, is gaining some traction in its trade, up by about 1%. But Amit, turn your attention to a Voltas. Look at the move that's coming in. Percentage-wise, it's only up about 1% right now, but it's a strong recovery on that counter. And in the last few trading sessions as well, this stock is seeing a bit of recovery. Of course, it fell. It had a very sharp fall from those 650, 660 odd levels all the way to about 550, 500 in fact. It's found some support. It's jumped back from there. Do you see a trade on a Voltas right now? Does it make sense if somebody is looking to enter fresh?
Yeah, so see, Voltas, as you're saying, it has seen a sharp recovery from the lows. If I see the broader picture also on the Voltas, see this stock was very much relatively insulated in the mid-cap fall, I would say. So yes, there is strength, underlying strength on in this stock. Right now it's trading, it has crossed its 200 EMA and has been consolidating around these levels. The moving average has also crossed over after the big entire fall. So yes, I would say the worst seems to be over now. It's just in the short term, it's just consolidating its recent up move, and I would expect this stock to again head higher towards levels of maybe 620, 625 in the near term.
All right, that is a Voltas. Similar structure coming on an NBCC now, Amit. It's up 6% in trade. Of course, still at a 50% discount to where the high was about 8-9 months back. But a strong recovery from those lows of about 60 odd on an NBCC, nearly about 20 odd % from those levels. What's the trade here then?
Right. Yes, in the short term, definitely it is the stock is looking good and is building up some momentum on the upside. I would say still some more upside towards the levels of 82, 83 is possible in the short term. See, we are seeing a lot of mid caps, good mid caps, have rebounded once the Nifty had made into new highs and the broader participation kicked in. So yeah, I mean a lot of good quality stocks are seeing some value buying happening from their lows. So yeah, I mean NBCC is also looking good towards 82, 83. One stock that I would like to add here is Jet Airways. I mean this stock has seen very sharp CVA fall, and yes, I agree the trend is overall very weak, but today it has just started a pullback. My sense is this pullback would actually materialize further, and we can see levels of about 360, 65 very quickly happening on Jet Airways.
All right, so look at Jet Airways. In fact, the entire aviation pack is moving up quite smartly in trade at the moment. Indigo, SpiceJet and Jet really on the move at the moment. Natasha, let me get your view on aviation. Of course, it's been under quite a bit of pressure recently, and today's move is kind of a recovery coming in on the back of quite a bit of pressure. Do you have a positive outlook for this space, especially on the back of the numbers that we've seen coming out in the first quarter?
Not really. We think that structurally this is a weak segment to be in, and we continue to maintain a negative stance on it.
All right, let's talk about oil and gas then, Natasha. The other theme that has been doing quite well today, ONGC was doing extremely well. In fact, it slipped just a short while ago. Ahead of numbers, of course, can be expected. Your expectations, firstly, from an ONGC and any of its peers that you are looking at the moment?
So if you see the trend in the crude oil prices, they have been going up, and although there has been a little bit of a pullback in recent times, but overall the trend has been upwards, and we do think that ONGC and as well as Oil India would benefit from that. However, because of the recent pullbacks as well as a bit of a negative news coming in from the regulatory perspective, both the stocks have underperformed the entire oil and gas pack as such, and we think the risk to reward ratio over there is quite attractive. So people or investors looking to enter it from a 6 months to a 9 months or even a year perspective can definitely look at it at these levels.
All right, though under pressure as far as an ONGC is concerned, ahead of what is expected to be quite a strong first quarter coming in for the company. In fact, we connected with Abhijit Bora, oil and gas analyst at Sharekhan, to understand the expectations from ONGC in the first quarter. Listen in to what he had to say.
We are expecting PAT at around 5,400 crore almost, which is a 40% jump on a YOY basis. But if you see on a sequential basis, there can be slight drop in the earnings, because last quarter they had a dividend income from oil PSUs, especially HPCL, which may not be in this quarter. So we remain positive on this stock. Further, the OVL will also benefit from higher oil prices. So that also gives a earning boost to the consolidated numbers.
Right, so clearly expecting a strong set of numbers this time around. The stock slipping ahead of those numbers. Amit, come in not just on an ONGC, after the weakness that we've seen just in the last hour or so, but OMCs are doing quite well today. We have BPCL, HPCL that are moving quite smartly, 1.5% up a piece. GAIL is also seeing a good move in today's day of trade. Anything interesting that you're spotting on these charts?
Sure. So, I mean, if I talk about GAIL and these gas-related stocks, not OMCs, but the MGLs and the IGLs and GAILs of the world, then yes, these are looking much better on the charts compared to the pure oil refining companies, So yes, GAIL is looking good. The trend is, overall strong in GAIL. It can see much higher levels from here. Yeah, if you pull out all the stocks, even IGL, they have all had very vertical rise, so some consolidation can happen, but we can have very, very sharp recoveries continuing in these stocks. As far as OMCs are concerned, Hind Petro and all, they have been into downtrend. In fact, these up moves I doubt would not last, and we can again see after some after maybe even a little bit of more pullback, again they start faltering down. So no, charts of gas companies are much better than the OMCs basically.
Right. That's a call on some of these oil and gas names. We have to take one quick break before we get into closing, but do come right back. About 15 minutes to go for trade. Broader markets are seeing some traction, even as the benchmarks are down about 100 points on the Nifty and about 200 points plus on the Bank Nifty. Back in 2 minutes, we will discuss more buzzing stocks in the last 10 minutes of trade.
Welcome back. You're watching the trading day. We're down over 100 points as far as the Nifty is concerned. 11,240, just above that mark is where we're trading at the moment, near day's low. In fact, at day's low, just as we're speaking. The Bank Nifty too down similarly in line, 0.9% down. What's holding out sectorally is clearly the Pharma pack, and the Pharma pack's been doing well since pretty much the start of trade this morning. So we have a Dr. Reddy's gains about 2.5% on that one. Lupin also seeing good gains. Cipla having a strong day of trade. Natasha, come in on these pharma names. There was a sense, in the start of the year that this will be a year that belongs to pharma. Do you think that, this is a much longer term story? How are you differentiating between pharma companies at the moment? Which are your preferences?
So So I think one has to be quite stock specific when it comes to picking names in the pharma, on the pharma side. We are still continuing to remain positive on names like Aurobindo Pharma, Natco Pharma, or even an Indoco Remedies, wherein we do feel that there would be a positive trend due to upcoming approvals, and at the same time the risk reward ratios too are looking quite favorable. We are really not very names as far as Lupin and Dr. Reddy's are concerned. We think that they could continue to see a bit more pain in coming times because most of the drug lines in which they operate have seen a margin re-rating, and the stocks are yet to price that in.
Right, but pharma is having a good day sectorally, good gains coming in for the pharma pack. In fact, the top sectoral mover in trade along with metals. Focus is on the exporters as well. The rupee, meanwhile, has just slipped to the lows of the day. Was in fact trading at a 6-week high at about 68.38, but has now slipped and it's down about 0.5% in comparison to the dollar. So watch out for the rupee as well. Dow futures are down about 160 points. So even as Asia was weak and you had that translate into Indian markets, and then Europe opened on a strong note and we saw a bit of a recovery, but again at the lows of the day, and now a cut of about 1% as Dow futures too are on the back foot, and Europe too has turned into negative territory. So definitely those global cues are taking a toll on Indian market action today. Of course, the cuts aren't nearly as severe as what you've seen for some of the other global markets. But just to highlight a couple of more stocks that we are looking at this afternoon. The pharma space, Amit, that Natasha was talking about, a lot of your mid-cap pharma names have in fact seen a lot of traction lately. Something like a Strides has bounced back. You had traction for Granules and Morpin recently as well. Divi's is up and about in today's trading session too. Ajanta Pharma reacted positively to its numbers. Anything that you're looking for in these mid-cap pharma names?
Yes, within mid-cap pharma names, there's one stock, Suven Life Science, which is, looking good. It is looking ripe for a very good up move. Something which can be very, very sustainable. And my sense is it should test and even breach 240-45 zone on the upside. And once it does that, then it's actually poised to even test its all-time highs, which is 338. See, this is, I think, a phase where, yes, slow but gradual accumulation is happening. Well, there is not much of a momentum going for these stocks, but generally, if I talk about the pharma index and a lot of names, large cap names from the pharma space, if I see, then they're showing a lot of base building formations, and these are the kind of signs which tells you that a bigger up move on a sustainable basis is coming. So I want, even from a large cap space, a bigger name, Lupin, I would not be surprised to see 1100 kind of levels coming onto the Lupin. So yes, the space looks good, but one needs to be a little patient because they may not give you very faster returns as they do not have strong momentum as of now for them.
Fair point. Require patience if you're looking to make money as far as pharma is concerned. But Lupin, a target of 1100 is what Amit sees for this one. We're trading at days high as far as the Lupin is concerned. In fact, the top gainer on the Nifty just as we speak. Well, it is all about earnings. A lot of stock specific action going on. Let's put the focus on a big set of numbers that we're looking out for from Titan tomorrow. We have Shefali joining in to give us a preview of what to expect from Titan. Shefali, a stable quarter this time?
Absolutely. So what we're looking forward to from Titan is about 10% growth as far as revenues are concerned at about 4,274 crore rupees. EBITDA margins are expected to come in at about 10.7% versus 9.9% on a YOY basis. Profit is expected to jump by about 12% to about 298 crore rupees on a YOY basis. As far as segmental performance is concerned, in the jewelry segment, we are expecting revenue growth of about 15 to 20 odd %. Management earlier put out a note about their performance in the first quarter about various segments, and they indicated that the company continues to gain market share across its businesses, and they also mentioned that jewelry sales, that is the volumes in Q1 barring May, saw YOY decline in the first quarter, and also so it's basically the realizations that will help the company put out a good show as far as the revenues are concerned in the jewelry segment. So we had gold prices and diamond prices going going up in the quarter. Gold prices were up by about 7%. Diamond price index was up by about 2% on a YOY basis. So that's the jewelry segment. As far as watches division is concerned, the segmental revenues are likely to grow by about 8 to 10%. And in the sunglasses segment, we can expect a recovery to come in. Some of the analysts are expecting that the sunglasses business has actually done well after many quarters in which we saw a decline. So that is one segment that we look forward to. And even in the new businesses like fragrance business, we are expecting a high growth to come in this particular quarter. So overall, a stable set of earnings is what we are expecting from Titan this time around.
Stable sort of earnings expected from Titan this time around. Natasha, coming to you on Titan as well, if you have a view on this counter. Of course, we've seen a stellar rally post GST rollout play out on this. Last few months, it's been stuck in a bit of a range, and then you've had concerns, especially on the jewelry business. As far as the performance goes, the management commentary also wasn't all that positive. Putting all of that together and with the numbers out, what's the call on Titan right now?
So I think if you're looking at consumption, which we think would continue to be a theme at least in this current financial year, Titan would continue to benefit from that, especially with the festive season just around the corner, which would help out the jewelry business as such. And at the same time, we do think that the sunglasses as well as the other divisions would also start staging a recovery. In terms of valuations, it looks quite attractive as well. But one has to remember this is from a long-term perspective of about 2.5 years. So we would continue to remain positive from that perspective.
All right, so that's the view as far as the Titan is concerned. We'll leave it at that. Natasha, thanks so much for joining in, sharing your perspective on some of these stocks and sectors that are on the move in the market. Amit, very quickly before we get into closing, auto has had quite a tough day, and this coming on the back of the July auto sales numbers. Maruti, for example, seeing cuts of over 2% as we speak. M&M also down about 2%. Tata Motors has been under pressure and seeing cuts of about 1.5% at the moment. How are you looking at auto at the moment? Specific stocks that are on your radar?
So if I talk about the stocks that I like from
All right, that is an issue with the Amit's line. We'll just try and rectify that for you. But a cut of about 1% now on the Nifty at the lows of the day is where you are shutting shop at down about 110 points. In fact, you started the day fairly stable, even as some of those global cues were weak at that point in time. But since then, you've only headed lower. Manpasand came out with numbers just a few seconds ago. That stock has reacted quite sharply. It's up 5% in trade as we speak. So spike coming in on the back of a strong performance. There has been margin expansion as well on that counter, which definitely has led to it. DCB Bank has increased its lending rates by 10 basis points, so that news is coming in fact trading under pressure as most of the banking space in trade today. What's held out? Let's start with that first before we talk about some of the pain points. It really was the pharma as well as a few PSU and metal names. So definitely pharma top sectoral gainer. Lupin was the top gainer, 2.5% up on that, as well as a Dr. Reddy's. Oil and gas did well in trade today. Sun Pharma, mind you, was also up about 1%, but oil and gas was very active. WTI prices have fallen to $67 per barrel, so that's another factor that's worked. HP, BP, IOC were positive. ONGC was trading with a positive bias, but gave up some of those gains. Watching out for those numbers. Should come out post-market hours. Also watching out for Indiabulls housing finance numbers. That stock has been trading in positive territory. Gas Authority, GAIL was also strong in trade today. A couple of your IT names did well, and Titan ahead of its numbers was also positive. But advanced decline ratio definitely in favor of decliners. 2:3 was the advanced decline ratio. Bharti Airtel lost out by about 3%. Kotak Mahindra Bank coming under pressure in trade today. So was a Maruti. Both of these stocks gave up a lot of their gains. And then you had a Reliance Industries that saw a cut of 2%. So a few of these heavyweights really adding to the pressure on the street. Grasim also lost out. M&M, HDFC Twins were under pressure in trade today. Vedanta was amongst the losers, even as some of the other metal stocks saw positive traction. Tata Motors, once again, the downside has resumed over here, although it saw a sharp swing in yesterday's trading session, down about 1.5% in trade today. L&T, Z, Bharti Infratel, Bajaj Finserv, Eicher were some of the other losers that we've had. Broader markets then, Aditya Birla Fashion ran up 14% in today's trading session. NBCC gains of nearly 6%. Reliance Infra gains of 4%. Steel Authority of India, JSPL, both of these counters were very active in trade today. Good gains coming in. Hindustan Copper, not too much of a positive up move, but ran up by about 4% in trade yesterday. And then you have all of these stocks that came out of ASM. So Dilip Buildcon, a good rally on this counter, 7.5% up. Venky's India, 20% gains. BEPL, Himadri Specialty Chemicals, Tinplate, HIL, all of these stocks reacted positively to that news. Aviation counters were very active in trade today as well. You had positive brokerage commentary from India Nivesh coming in for an Indigo, a target of 1200 plus over there. That stock did well. Crude fall also auguring well for this space. So Jet Airways ran up by about 6.5% in today's trading session. Rain Industries, HEG, both of these counters were also on the move. HEG came out with very strong numbers as well. 8K Miles had a good day of trade. Reliance Naval was very active in trade today. Quality saw some good gains. Alembic Pharma, Manappuram Finance, Equitas as well. You had a Granules India, we were just talking about this one, good gains coming in. Divi's did well for itself, so did a Bombay Dyeing and MRPL. Shrey Infra bouncing back as well. Ratan India Power, Uflex Limited, NCC, KC International, Procter & Gamble, Eveready, Max Financial, Solar Industries and Gateway Distripark were some of the other gainers in trade today. Pidilite meanwhile saw a correction post its numbers, came in after market hours yesterday. Marico numbers came out a while back, 5.5% cut coming in on this one. Margins have contracted more than expected on the back of raw material prices. L&T Technologies, L&T the parent is selling a stake about 4% via an offer for sale. That was down about 5%. Sonata Software lost out in trade today. JBF Industries, Adani Power, Kaveri Seed, Radico Khetan, Gati, Reddington, Motherson Sumi was very weak in today's trading session. So was Aminda Corporation, Supreme Industries, Den Networks, DLF, which saw a positive traction at the start of this week. DCB Bank that we just spoke about, Dixon Technologies, Delta Corp, Trent, Bank of Baroda, PNB and Dishman Carborundum were some of the other losers in trade. Barring some of the metal, PSU and pharma names, all other sectors came under pressure in trade today. Real estate was the top loser, followed by auto, some of the banking and financial names, even some of the energy names were on the back foot as far as today's trading session goes. Amit is back with us. Amit, ending just below 11,250, a 100-point cut on the Nifty, a near 250-point cut on the Bank Nifty. Going into the weekend session, what's the sense right now? Because global cues have been negative. So what should traders do? Use this dip to buy in or wait for a couple of days, let maybe this minor pullback downwards continue and then take a fresh position?
Sure. See, the way we have closed today, while the broader trend still is very much intact and there are no doubts about it, but just in the near term, maybe next 2 or 3 sessions, we are likely to see, Nifty testing 11,100, 11,150 on the downside. So yes, in the near term, for the extremely short-term traders, we should see some more downside even for the Bank Nifty. We can actually, test those 27,150 kind of a zone. But for positional builders, I would still suggest that this is the time to actually build the positions on the long side for a positional trader, because at this stage, your risk reward becomes very, very favorable, and I'm quite confident once this near-term pain is gone, we should resume the uptrend. And actually, Bank Nifty's, we have a target of about 28,000 to 28,200 on the upside, which we are confident should get achieved. So I think dips should be bought into for a positional trader.
All right, Amit, we leave it at that. Thanks so much for joining in. We'll of course have to keep an eye on how things play out tomorrow, but definitely a weak close coming in for the market today, closing out with cuts of about 100 points on the Nifty.
Absolutely. Just before we wrap up, those flashes at the bottom of your screen, I just want to highlight Cognizant numbers that came out just as we were getting into close. Revenue at $4.01 billion versus $4.03 billion, so slightly below what the street was estimating. Remember, this is a widely tracked stock both in India and worldwide, and of course sets the trend as far as some of those earnings are concerned. So slightly below estimates on the top line front, at least for Cognizant, will have an impact on IT stocks in trade tomorrow. sees Q3 revenue at $4.06 billion to $4.1 billion. So that's the guidance coming in. The non-GAAP share is at $1.19. The GAAP share is at 78 cents. Sees FY18 non-GAAP share at least at $4.50 billion. So that's $4.50. So that's the full year guidance over there. And guiding for a similar revenue print as far as the next quarter is concerned on a Cognizant right now. So that's the expert. You were expecting some earnings gain to come in from the domain expertise business for a Cognizant, because it has been trailing estimates for the last 4 quarters, although previous quarter was a bit of a surprise. In fact, a positive earnings surprise that came in. You had a 1% jump on the revenue front as well. So watch out for the IT stocks tomorrow on the back of the Cognizant numbers that have come in overnight. Nasdaq has been under pressure of late. Of course, yesterday was a big surge because of that gain in Apple, but otherwise some of these large tech earnings, especially the likes of Facebook, have disappointed recently. That has led to pressure on the Nasdaq. So we'll keep an eye out on that, but completely out of time on this edition of the trading day. Thank you so much for watching.